Good morning, everyone. It's Wednesday, October 4th. I hope you've had a great week so far. Yesterday, and this is the chart of yesterday, the S&P E-mini, and the market started up right at the bottom of the calculated trading zone, made a head fake up toward the previous day's close at 43.25, immediately was shot down by the interest rate report, where 10-year treasuries have risen to their highest level in almost 25 years. So this puts a damper on the stock market and particularly the mortgage market, because real estate accounts for a huge amount of business that moves the economy. So with interest rates spiking, mortgage rates are approaching 8% for a 30-year conventional mortgage, and that threw the stock market into a tizzy, and the market immediately shot down. But today I want to talk about, where does the market go? The market has targets. Did you know that the market has targets? Yes, it moves in a haphazard fashion that's difficult to determine, up and down, back and forth, but the market does have targets, and I want to prove it to you. But first, I want to go over to the economic calendar, and you should always look at the economic calendar prior to the market open. Today, the ADP employment report came out, and that report came out showing that the payrolls, private payrolls, rose only 89,000 according to ADP, where the forecast was 177 or 178,000. So that basically reverses yesterday's what caused yesterday's market to crash. But I want to talk today about targets, and that the market has targets. Now I want to go, I've already started with yesterday's chart, but I want to go back a day before. This is Monday, October 2nd, and I want you to notice something. The market, it goes up and down, and look, there are 10 points between each horizontal line on this chart. Pretty big scale, but just bear with me. As you can see, the market closed the gap, hit the previous day's close, Friday's close, and then basically stayed around this. Now, the previous day's close is always a target. What else are targets? Well, the Taylor calculated resistance and support are also targets. And the transposed Taylor trading zone is also targets for resistance and support. I'm going to show that to you. So as I said, the previous day's close is always a target. Look how the market basically moves up and down around that line. The market also moves basically up and down around the calculated support of the Taylor trading zone. And look at the end of the day where the market shoots up, where? Back to the target, to the previous day's close. So the market has targets. Keep that in mind. Now I want to go back to yesterday, Tuesday. The market made a head fake to the previous close, to Monday's close. Didn't get there before it really tanked. It really tanked. And so where are the targets here? Because if the market was greatly affected by an announcement or by interest rates, as was the cause of yesterday, where are the targets? You don't see any targets here. Well, not so fast. The targets, as I said, is the previous day's close, and it also is the Taylor calculated resistance and support. Now, also I said that the Taylor transposed calculated resistance and support are also targets. So I'm going to transpose it, and I'm going to make a clone, and I'm going to carry that clone down to the intraday high, which was put in just after the open, about 10 o'clock, and just this chart. And where are the new targets? Where are the targets? Okay, here, the Taylor calculated support at 42.69. So even though the market was greatly affected by the announcement or by the interest rate spiking, where did the market gyrate around? Targets. So this is something that you need to look out for. There are other targets as well. These are three primary targets. I'm telling you, there are three primary targets always. It's the previous day's close, the Taylor calculated resistance, the Taylor calculated support, and the transposed values of those. And you can go back days, weeks, months, and you'll find the same is true. Now, if you don't have the Taylor calculator, the Taylor trading zone is calculated using Taylor's trading technique or Taylor's book method. Very difficult to figure out. This is what the calculations look like. At least I put them together in an Excel spreadsheet. You can get them from my site at timelessdollar.com, or you can read the book and try to figure it out. He doesn't give the formulas. There are a dozen formulas that go into it that are averages, and the final averages are averaged. So it's pretty complicated, but you can get the calculator on my site at timelessdollar.com and use it to calculate any market. If you trade the NQs, if you trade the ES, if you trade the CLs, if you trade the Nifty 50, you can use it for any and all of those markets. Use it, download it once, use it for anything you want. So that's my video of today. Marv Eisen for Timeless Dollar Trading Academy. Remember, find the targets and you'll be a better trader. Thanks so much for watching. Trade with lots of patience, and I'll see you in my next video.